They're working. You can hear me okay?
Oh, all right.
You can hear me?
I can hear you. We all can hear you, I think.
Good.
All right. So welcome, everybody. For those of you that haven't been to one of these before, this is Jody Hatano with Rocket Mortgage, who is the preferred lender for our team. And she's going to be talking about young people buying properties. Is that it? Or getting loans?
Depending on your definition of young, yes. I mean, I think I'm young, but clearly I'm not the generation that I'm going to talk about today.
Okay. Then why don't you take it away? I'm going to
Oh,
put your
good.
information in the chat. So for those who are looking, and did you want to share your screen or do anything?
Yes, I will do that now. Let me
You may do
minimize
so.
things. You can let me know when it's.
We can see it. It doesn't
Okay.
cover the whole. There we go.
Okay, all good now?
Yeah.
Great. Okay. Well, thank you everyone for taking time out of your day to attend this session. I think you'll find it informative. I know that I've learned quite a bit just by doing my research. But this is a topic that has been in the back of my mind for quite some time as we are going into not only just a different real estate market than what we've even been in the last few years, but we're seeing younger generations, come into the market now. And as we've been talking about for quite some time now, since I started, these calls with you guys in 2020, we've talked about how to market to different generations. Um, you know, what are they looking for? What's important to them? We can't just stay in our own mindset because we've got our own belief system and our own experiences that help shape us and our thoughts of home ownership and should we buy or not. And so doing the research for this particular call, it was really eye opening to learn more about, especially Gen Z and millennials, and what their thoughts are about home ownership based on what they've seen here in the last, several years, and how can we adapt and how can we become the expert that they lean on, in addition to all the other ways that they educate themselves. But how can we be an expert and show our value to them during the transaction from start, even past closing? And some of these insights I'm going to share with you today, I think will help you when you're out in your community talking with people, how to appeal to them more, to understand and be more empathetic of what they're looking for when it comes to buying a home, especially for the first time. So we're going to jump right in. If you have questions during the call, feel free to put them in the chat. We can address that at the end, unless it's something that, of course, Mike, if I say something that might be sound off the wall, let me know and I'll address it immediately. Otherwise, we'll do a Q&A at the end. So today we're going to talk about insights and strategies for the next generation of home buyers, specifically Gen Z and millennials. I'm going to give you some practical tips to help you understand how to serve them better. Oh, and my QR code there, if you guys want to scan that real quick, it's just going to take you to my website, but also just showing you that it's something that I can add in any type of marketing materials that you want to also appeal to this younger generations. Okay, so what we're going to talk about is I'm going to go over some generational statistics just to give you kind of a basic of what we're going to talk about today. I'm going to talk about some behavioral behaviors and expectations that both Gen Z and millennials have, and then we're going to talk about how to market to them. And then after that, of course, we'll have our Q&A. And I want to start by saying that some of this, when I talk about Gen Z and millennials, there's going to be some overlapping. Okay, so the generations are not, there's not some, black and white that separates them in the way that they think and feel about real estate or home ownership. So a lot of it's going to overlap, but there will be some that's a little bit more specific to each generation, specifically when it relates to their risk appetite. So millennials, 1981 to 1996. Gen Z is going to be 1997 to 2012. Millennials are going to be right now ages 28 to 43. And Generation Z I'm sorry. Yep, Generation Z, 12 to 27. Now, obviously, we know that people that are 12 years old are not buying real estate, right? You have to be 18 to sign a legal binding contract, but the older Generation Z is really what we're going to focus on. But also remember, unless you plan on getting out of real estate in the next year or two, you still want to know these things, even for the younger Generation Z, because they will be coming into the market, of course, every year, but in the foreseeable future. Oh, sorry. Okay. So since 2020, younger millennial home buyers grew faster. And this is the first time it's happened since we've been taking recordings of this. Younger millennials are the fastest growing generation from Gen Z, Gen Y, Gen X, and baby boomers. Gen Y is going to be the younger millennials. The millennials generation is the largest generation that's ever existed. So that speaks also to the wave of homeowners that are going to come to the market is going to be incredibly large compared to past generations. Now, this is also including for the first time ever Gen Z, the newest generation born between 1997 and 2012. So some of the research I did, one of the statistics that I was reading about is coming from Gen Z Planet founder Hannah Ben Shabbat. Hannah surveyed about 1,000 people in Gen Z and millennial group to study the distinct postures regarding the culture, work, and commerce that they are involved in, and especially when it relates to home buying. And she found that the difference is really mostly, again, their risk appetite. Millennials end up being more risk adverse, and Gen Z are more risk takers. And why is that? Let me move this thing there. Okay. So there's a 24% difference in this particular answer for the question of, I would like to own a home in the future. That's a pretty stark difference, as you'll see on the next slide, a percentage that is a lot closer together based on a different question. And so why is that millennials are more risk adverse and Gen Zers are not? Millennials have had a negative experience when it comes to student loan debt. That is back when you lived more in the time of follow your dreams, and you kind of threw practicality out the window. I know I did when I went to school. I'm not a millennial. I'm just a generation before that, but still. Negative experiences with student loan debt, difficulties finding suitable employment after higher education. I've got a millennial nephew right now. He's been out of college for 3 years and has yet to find a job that's even remotely close to what he graduated with. So I can see it in action. Millennials also avoid taking on debt. I think they learned from the previous generation just how crippling that can be with high student loan debt, credit card debt. They saw what happened there, and then they are afraid of it. Gen Z, on the other hand, they answered at 87% would like to own a home in the future. They lived through the peak of the 2008 recession. They are graduates of the global pandemic. They have experienced low interest rate environment, especially in the home buying world here. And they also have experienced the growth of work from home culture, buying in lower price areas, maybe go out to a little bit of suburbia as opposed to being in more urban environments, because maybe they're commuting to the office once a week or maybe not at all. Now, I know that there is more push now for people to go back into the office, and it very well may end up that the work from home culture kind of dies out. Who knows? I tend to think it won't as much, just considering how technologically advanced we are. The introduction of Zoom as a very easy, convenient way to meet, I think is also, important. And I don't think that that's just going to go away. The next question that was asked is homeownership a way to build wealth? Now, as you saw, there was a 24% difference in I would like to own a home, and now there's only an 8% difference in the belief that homeownership is a way to build wealth. And that's important. And why is that? Because I think that millennials believe that homeownership is a way to build wealth, but they don't believe they can attain it. Well, that's where you and I are going to come in and help them change that mindset with, lots of research, of course, and facts and advice in the way that we grew up and how we look at homeownership. Millennials are more concerned with student loan debt than Gen Zers. 36% of them said that the student loan debt was a leading barrier to saving for a down payment. 50% said that they're actively trying to buy a home. So that's significant. They're actively trying to buy a home, 50% of them, but at the same time, student loan debt is a barrier. So, there's push for student loan debt forgiveness, and this has nothing to do with what your political belief system is, but just know that that is something that when you're working with or being introduced to people of these generations, you've got to remember that. You've got to ask, do you have student loan debt? Is that a barrier for you? How can we overcome that? I'll show you later how to overcome things like that. For example, lower down payment, low mortgage insurance if they don't have 20% down. Lots of gift funds allowed on many loans out there. So Gen Z, their answer is that homeownership is a way to build wealth. Greater proportion of Gen Zers are first generation Americans, right? They're immigrants. Their parents came over here from other countries and weren't able to buy homes for many reasons. A lot of it was employment, income, and just the even ability to be approved for a loan and not having, a long history here, credit and income and things like that. Their parents viewed the dream of homeownership as the number one dream that you have when you move to America. So Gen Z is the first generation for many of them that have become homeowners. And it does create a sense of pride, especially civic pride, that you're, in your community, you're grounded, you've got roots, especially if you're going to grow a family of any type, then, you want to be settled. Gen Z has about $360 billion in disposable income. We do see that those generations do not have lots and lots of kids like prior generations did. So they've got more disposable income on average than previous. Financial security is a core value for Gen Zers and also millennials. They have been saving money at early stages of life. They've depended on their parents for advice with, how to handle finances. And I think that that's important because it shows a wave of financial literacy that we haven't seen in the past. Otherwise, maybe 2008 wouldn't have happened, right? Okay, so now we're going to talk about behaviors and expectations as it relates to Gen Z. And again, when I talk about millennials next, a lot of this will overlap, but there are some differences. When it comes to Gen Z, they have very high expectations for a customer experience. When it comes to money, they're very financially savvy. And I'm also going to talk about house hacking if you haven't heard that term before. I learned about that just during this research. I thought was pretty interesting. So customer experience for Gen Z is very, very high on their list of priorities in any type of purchase they make, whether it's real estate or, buying lunch or ordering, grocery delivery. They've had a cell phone for the bulk of their formative years. They're very active on social media. They have an encyclopedia at their fingertips. I don't know if the generation I grew up in, we actually had the World Encyclopedia, big, huge, 20 volumes of it. And you had to open it up and try to research and find the topic you were looking at or looking for. And then most of the time it was outdated. And now that doesn't happen. And instant information, 3 o'clock in the morning, 3 o'clock in the afternoon, you want to find something out. Gen Zers, millennials know how to get to it right away. And they spend a lot of their time online. So the experiences from these ideas have cultivated a high expectation for customer service. For example, and this speaks to me because I do DoorDash more than I should. Not only when you DoorDash or even ordering things online, it's not just, okay, thanks for your order. It'll be there at some point. When I was growing up, the big thing was, I think Domino's pizza delivery guaranteed 28-minute delivery. and you made that phone call order, and then you put your clock on, you're like, okay, 28 minutes later it better be here, and if not, then I have to call them and get, a free pizza or my money back. No longer is it like that. With DoorDash, for example, you place your order, you see when your order is accepted by the restaurant, you see when it's being prepared, then you're updated when the dasher's on their way to pick up the order, you're updated when the dasher's there waiting on your order, you're updated when they picked it up, you're updated. You can watch and track their drive all the way to your house. As soon as that order is delivered, you get the notification, and immediately, how was your order? How was the dasher? So you get to rate these two different aspects of this, simple food delivery. And if you're not satisfied with it, you get an instant refund. An item is missing. Maybe it was a $10 item. Then do you want an instant credit, or do you want, money back? You can't get better customer service than that, right? You're not asking them to prove it or anything like that. You're just basically saying, hey, we believe you, we trust you, and we're going to make it right. And those things are basic now for Gen Zers and millennials as well. Is that's what they expect. They don't want to hear, oh, okay, well, it's a problem. Sorry about that. We'll do better next time. They want it to be made right away. So how do we compete? In the real estate world, is we have to have our standard of customer service higher than anybody else out there. And I believe, I know a lot of you on this call already, you already have high standards of customer service, but just know that it's going to have to keep going higher and higher. What we want to do is avoid issues that would then trigger some type of negative reaction. I think that aligning with a lender like me at Rocket is important because we're not just a lender, we're also a technology company. And the technology that Rocket is working on is going to speak so strongly to these generations coming up that they're going to love it. It's going to be very easy to use. We're going to be set apart from majority of lenders out there that simply don't have the financial backing or the amount of basically experience with tech and things that we're doing. We're going to be setting ourselves apart. You all know I love Golden One Credit Union. I still love them, but I don't think that they would ever be able to compete with someone like Rocket, considering that we're about $9 billion in assets on hand. With that alone, it says that we're going to be able to compete in the space and be able to provide these generations with the tools that they need and want to be able to become homeowners. When it comes to money, we can learn a thing or two from the Gen Zers. So Gen Zers have chosen side hustles over debt, right? So they go to college, instead of taking out a lot of student loan debt, because they learned from millennials that that is horrible and it's crippling, what they're doing is either they're choosing to get degrees in things that will pay them higher salaries, again, not chasing the dream, but being more practical. They're taking on, jobs like door dashing or driving for Uber to go ahead and pay off those expenses so that they're not taking on debt. Their parents have influenced their financial decisions. In a poll done by Josh Rathauer with Unidays, he polled 1,800, a little over 1,800 Gen Zers, and 61% of them had opened an account, their first financial account ever, with the institution that their parents bank at. I know for me, when I've opened an account, I just picked the biggest bank that I could find in my hometown because I thought it looked cool, and I like going in there because it made me feel important. I think I probably opened it with $5. But these generations depend on their parents for advice, and also they don't plan on opening another account at a different institution, no matter what the incentive is. We always see, oh, $300 if you open an account here, and they are not as trustworthy with that. They depend on their parents for advice. Few of them had credit cards, and 72% of them already had a checking or savings account. When it comes to money, Gen Zers care what you care, that you care or don't care. So they look at the integrity of any company that they do business with, not just financially, but any type of business, whether it's travel or groceries even. They want to work with companies that care about the community, that care about social things, that care about the environment. 93% of them polled said that it's important for them to bank with ethical companies that give back. so they do look at, these companies that say, well, we, like for Rocket, for example, we have, a foundation where we're helping to bridge the home affordability gap by offering affordable housing in urban communities, or, maybe lower rental income properties and things like that, and grants. Lots of great things that Rocket does, as well as a lot of other companies, but that is very important to Gen Zers. 86% of them are going to choose a company that's more ethical, even if the incentive is lower. Okay. So they are very concerned with that. And that's something that we have to keep in the back of our mind when we're talking with them. You as a real estate agent, when you're meeting, potential buyers or sellers, go ahead and bring some of those statistics with you to the meeting to say, hey, my company, EXP, this is what we do to serve this community. This is what we've done. We have, XYZ foundations, or this is how much we've given back. Let them know that you guys care more about um, the world, not just the money. House hacking. So this is something that I learned about during this research. And if you have heard of house hacking or have anything to say about it, feel free to put a couple of comments in the chat box and we can talk about it after. House hacking for these generations, it's basically renting out a portion of your home for income. Per Zillow, 50% of millennials and Gen Z says house hacking is very or extremely important to them. The extra money can help make those dreams of homeownership a reality. Now, one thing to keep in mind is border income, which is basically what that's called, is looked at a little bit differently when it comes to qualifying for a mortgage. So, border income, it can be used in some situations, but not always. I think mentally for them, not necessarily for qualifying for the mortgage, but mentally for them, it helps them be able to afford the payment, even if they can afford it on paper. There's a difference between affording it on paper and then, writing that check out every month. So, call to action for this, what I think would be a great avenue to market and talk with millennials and Gen Zers about house hacking. Okay, let's talk about them buying 1 to 4 unit properties. We've been talking about that actually for quite some time. I've been kind of pushing you guys to talk with younger generations about, buying a duplex, renting out one side, living in the other. Generations before that weren't so into it, but these generations now are. So keep that in part of your toolkit. You want to look at multiple unit properties. Up to 4 unit is going to be residential. Anything over that's commercial. So, we won't get into that today. But for 1 to 4 unit properties, FHA is only 3.5% down, and conventional, as of 2024, is only 5% down. It used to be 15 after 2 units. So if it's a duplex up to a 4 unit, conventional required 15% down. Now it's only 5%. So they compete with FHA. Border income, which is what this is, basically renting a room out of your house, it is actually allowed on Fannie Mae's Purchase Plus, Home Ready, or Freddie Mac's Home Possible or Borrow Smart loans. Now, those loans do carry, there are some restrictions. It's not just a free for all. For example, to use border income, the border other person would have to have lived with the buyer at least 12 months prior to. So we've got to show some consistency. It can't just be, hey, I'm going to buy this house. I need some extra income. Come be my border. We've got to show that this was already happening. So if you're talking with someone who's maybe not ready yet and they've got a roommate, let's talk with them about, get with their CPA and talk with them about how to use that income on their tax returns so that we can use it going forward. 2 to 4 unit properties, so duplex up to a quad, you actually can use the rent on the rent survey from the appraisal in most cases to be able to help them qualify to purchase. That's phenomenal because, oh, did you say something, Mike? Okay. So what's amazing about that is, of course, not only are the loan limits higher for Fannie, Freddie, and FHA and VA for multifamily units, but we can use the rent from those units, projected rent or current rent, if it's going to be delivered, occupied at closing. We can use that to offset the payment and help them qualify. For millennials, okay, so millennials, the biggest piece for them is there's a high demand for smart homes. They are very tech savvy. They do a lot of their research online. They are going to do a lot of that before they even get to you in most cases. And they are very environmentally conscious. So the demand for smart homes for millennials, they grew up in a technologically transformative age. So they already know what's out there and they want it. They prefer tech intervention in their homes. The National Association of Home Builders reported 36% of them already purchased a home that had smart home features, or if it didn't already, they installed it. From refrigerators to lights, all equipment, they want it to be wirelessly connected. And I will speak to that. Again, I'm not a millennial or Gen Zer, but we purchased a new fridge recently. And because it was on sale, I got the smart hub. I thought it was silly that, I could see, my refrigerator from my phone, but it actually came in handy at the grocery store the other night. Do I really have this in that first shelf? I was able to look at it and say, yes, I do have it. So I didn't have to spend any extra money buying something I didn't need. So it's very important to them. You turn your lights out in when you go to bed, you turn lights out from the phone. You can set, your appliances to be turned on and off by schedule. It saves on energy. They're also very particular about star rated appliances. They look at that. They want to know that when they're using their appliances, they are having as minimal impact on the environment as possible. They're also very visually and motivated and stimulated. When they grew up basically in the open floor plan of the last 20 years or so, when the open floor plan became a thing, where you could see the whole home and it was beautiful, and you weren't hiding junk in various places because you would see it. They love beautiful space, and they believe that it reflects who they are as a person. The tech savvy millennials, they grew up with the internet. They make well informed decisions based on exhaustive research. House hunting is done online. They explore digital platforms first. So they're going to go do a virtual tour of a property before they're going to go see it. Once they're satisfied with the virtual tour, then they're going to say, hey, we like it. We want to take a look at it. Can we meet in person? They also go online for mortgage options. So this is, yes, people do need to research mortgage options and know what's out there. The downside to that is what always drives me nuts are the constant and multiple credit pulls. So, for example, if you've got a buyer that has gone on to, say, bankrate.com, plug their information in, you better believe that's going to go out to 6 or 7 different lenders and maybe more. And those are going to be separate credit pulls. And then they're going to get the buyers are going to get overwhelmed with phone calls, texts, emails, and it can actually turn into be a negative experience. Now, at the same time, yes, they need to educate themselves. I know when I work with buyers, I want them to know that they've done their due diligence. It's important that they've talked with other lenders out there to know what's available and what's not. Of course, hoping they'll stay with me because I provide an incredible service, especially when it comes to education about the process, than a lot of other lenders out there. So what they've also experienced by doing that is they have felt that there is more of a bait and switch out there when they go online. There's all these low rates advertised, but then when they click on things, they go through the process, they find out, oh, that's not your rate. It's actually, a point higher or something like that. So it can be a negative experience. But we can mitigate that with having them, talk directly with your preferred lenders. Millennials are very environmentally and socially conscious. They share the same perspectives as the older generations when it comes to these things, Gen Z and things like that. Climate change and sustainability is very important to them. It is front and center in the news. It's something that drives their decisions when they're buying any product, especially when it comes to homes. They are more likely to buy properties that have energy efficient appliances and features like solar, smart home technology. They prefer green building um, uh, materials, and you'll see that even with builders out there. They advertise that this is a green home. And why are they doing that? It's because they know that these generations care about that more than they even care about the size of the home, right? They are picking quality over quantity. If this is an urban setting, you can bet that they want access to public transportation. Walkability is a factor. They want green space. They want it to be a nice area that they can walk in, exercise at the park, do yoga at the park, things like that. Co-living and communal living are also gaining popularity with these generations. I just spoke about house hacking. It's the same concept. You're renting out a space in your home. Um, Co-living and communal living also could speak to co-ops. In addition to condos, condos, it's your own space. So now we know what their behaviors are, kind of how they think, and what the statistics are. Now, how do we market to them? Okay, we can't just, there's no newspapers, they don't pick up newspapers really anymore and read them. So, how do we market to them to also engage with them, to let them know that we understand what you're looking for, and here's how we can help you? So, in the how to market, I'm going to talk about Rocket Money and Rocket Rewards, credit upgrade, temporary buy downs. I'm also going to talk about how important it is on the 30-year fixed for these generations, considering their risk appetite, and the importance of a verified approval letter. Now, when I said that you should partner with someone like me at Rocket, because we're not just a lender, we're also a technology company, and we are very advanced in the things that we are doing, more so than any lender I've talked with in the last 8-9 months or so. That when I was interviewing at various places. I think that what we will have to offer now and in the future is going to set us apart, which will translate into us doing more business together, because we're going to attract, as Rocket, I'm going to attract more buyers that may not have an agent. So then I'll be able to turn those over to you, depending on what area you're in and your expertise, make sure it's the right fit. A lot of lenders won't be able to do that because they simply don't have the resources. So when we talk about millennials and Gen Zers, they are all about relationship. They want trust. They want to know that you care. They want to know that you are in it for the long haul. What I think sets Rocket apart from other lenders is we will start with them at no cost to them. This is important. No cost to them. We'll start from the very beginning. Okay, you just graduated college or whatever you're doing, or trade school, or maybe you just went straight into employment, and you're trying to figure out how to work with the money that you're making now. Rocket Money is great. It basically will help you or help them uh, with any prescriptions. They probably are in prescriptions. Subscriptions that can go in and be canceled. Now, I know a lot of other, there's other companies that do this, but what's nice about Rocket is you can all keep it kind of all together with Rocket Money and with Rocket Rewards. I'll talk about that next. So with Rocket Money, so for example, I meet someone and we're going to start the journey of, becoming pre-approved and underwriting and then checking out their buying power. But I'm going to go ahead and suggest this up front because this is important as well. Again, it speaks to their financial savviness. They want to save money. They don't want to be wasteful. So we have them go to Rocket Money, sign up. Let me skip the verification. I just want to show you what it looks like. And you should do this as well. So basically, it helps them view all of their subscriptions online. They can stay on top of all their bills. We can help them cancel unwanted subscriptions, duplicate subscriptions, things like that. It's a free app that they download. They can have it at their fingertips. They can pull in all of their assets in this app so that they have one snapshot picture of all of their finances and their liabilities. How much you have saved, how much do you have coming in, how much do you have going out. This is a phenomenal tool. Okay, and then the next is Rocket Rewards. So when I meet someone, I'm going to have them sign up for Rocket Money. Then I'm going to turn around and have them sign up for Rocket Rewards. Why? Well, Rocket Rewards is going to give points to them as they say read various articles, watch videos, use calculators, work on their application. They're going to earn points for that translate into closing cost credit. Okay, so what does that speak to? It speaks to sustainability. It speaks to their financial savviness. They want to save money. They don't want to be wasteful. This helps them do that. They're getting paid to educate themselves, which is what they love already. They love education. They want to know more, and we're going to reward them for that. So I'm setting them up on Rocket Money. I'm setting them up on Rocket Rewards. They can even get 7,500 points for just applying. or I'm sorry, for joining. As you can see in this screenshot, 12,500 points is $125 in closing cost credit. The more you get rewarded, the more you save. The next feature that I believe sets Rocket apart from other lenders is that we offer credit upgrade. So this program, and I've talked about it a few calls before, but this program is designed to help clients qualify for a mortgage. So let's say um, we've got them set up with Rocket Money and Rocket Rewards, and now I've pulled credit. They're just a little bit below where they need to be score wise to qualify. Or maybe they're looking, it's going to be about 6 months before they are planning to buy, but maybe we can work on their credit score. Maybe their credit score is, a little bit lower, their interest rate's going to be higher. So let's help them try to get that improved. This is complimentary. Okay. It's a complimentary consultant that we will provide that will help develop customized strategies for them to help increase their credit score and also just help them understand credit even more. Rocket Rewards, Rocket Money, Credit Upgrade. Those three things are so important in this whole transaction, and being able to offer those services to your clients, my borrowers, at free of charge for them. As a matter of fact, they're getting, rewarded for it. I think you'd be hard pressed to find another lender out there that does that without charging anything. So what that speaks to, in my opinion, that Rocket is doing is saying, we care about you from the very beginning. You might have a credit challenge, or maybe you need to save a little bit more money. We're not going to drop you and say, well, call me back whenever you're ready. We're going to help you through it. We're going to hold your hand. We're going to walk you through the entire process. That also helps with retention. It builds trust. It also makes you look really good because until you send them to me, maybe they don't know any of this stuff exists, right? So you're giving them a thing of value by introducing them to me and referring them to me here at Rocket because I'm providing something that's, it's really priceless in the grand scheme of this whole home buying process. It is going to be most likely the largest purchase any of us actually ever make. And why not be as educated as we possibly can be, especially knowing that that's what these generations coming into the market and that are already in the market to buy what they want. Temporary buy downs. Now, I've talked about this with a few of you, and I am going to be fully transparent with you. I do get pushback because what I hear is, well, there's a lot of offers out there, and we don't want to ruffle any feathers. We don't want to, we just want to make sure we get it. Okay, I get that. That's important. Yes, that is definitely something to think about. However, there are ways to work out having a temporary buy down still be accepted by a seller. Towards the end of the call, I'll mention about what, maybe my advice if you're a listing agent, how to market that to help open up the pool of buyers. Offering a temporary buy down as a listing agent, when you're putting that property on the market, it speaks to the younger generations that, hey, we understand, we get it. Affordability is an issue. And we're going to go on top of it and offer it anyway. If it's not offered in the listing and, you want to talk with me about it, let me give you the numbers. It's not as crazy as you might think. For example, just had someone go under contract for about 450 purchase price. The 1 year buy down for them was under $4,000. Okay, that's very, very doable. It does allow the client to reduce monthly payments anywhere from 1 to 3 years from the very beginning of when they start making payments. If the property needs some updating, this could help them be able to open up a little bit more cash flow for that, or to maybe furnish the home. It's their first home. It's government loans, Fannie, Freddie, VA, FHA, even for second homes, fixed rate loans, they all qualify for temporary buy downs. And if you haven't talked with me about temporary buy downs before, please let's do it because it is something that only benefits your borrower. It's not a waste of money. If we were to refinance or they sell the property before that period is over, whether it's 1 year to 3 years, the money that was put aside for that buy down, it comes back to them as a form of principal reduction. So it's actually better than a permanent buy down, especially in this market, considering probably going to refinance, maybe not this year, but maybe in the next year, 2, maybe 3 years, but hopefully within 2. Verified approval letter. So now What is this? It means that credit, income, and assets have already been underwritten. And I mean past the DU that I run. DU is desktop underwriting. It's automated underwriting that most lenders have. I put in information. It's basically reading the data that we input, minus the credit report. There is a credit report that's pulled, so you can't manipulate that at all. I can put in any amount for income. I can put any amount for assets I want, run underwriting, spit out a pre approval letter. Great. It's only as good as the information I put in. And if it's not accurate, then that letter is really not even worth its weight in paper. What does a verified approval letter do? We send that to an actual underwriter, not automated system. That's the first step. The next step is actual physical underwriting happens with credit, income, and assets. And we're going to condition that loan as if it is an active loan with a contract. What does that do? That once we get through that process, well, you can compete with cash offers because it's similar to cash, right? We've already gone through all of underwriting. There's no more conditions left except for property conditions, appraisal, clear title. If it's a condo, then some HOA, docs would be needed and HOA approval, things like that. This helps compete with cash because you can close really quickly. If I have a loan application in with a verified approval letter request by 7 p.m., my time, it's going to be out by 9 a.m. the very next morning. And that does happen. Okay. I have had it happen already. When I was in Detroit a couple of weeks ago, I rushed we call it a VAL. I rushed that request in. I got it back in an hour and 15 minutes. Verified approval letter issued. Boom, done. This one didn't need any conditions because we did a pretty good job getting everything in up front. The most recent one I did, need a little bit of rental history updated, but once we got that in, got my verified letter, made an offer, competing with cash, they're negotiating, fingers crossed, they'll get it. These are things that, yes, other lenders will underwrite up front. I'm not saying that we're the only ones that do it, but I will say that what we do better than other lenders that do it up front is speed and accuracy. Speed in by 7 p.m., out by 9 the next day, and also underwriting on the weekends. You're not going to find that with other lenders. The previous lender I was out, I sent in for one of these upfront underwrites, and it was 2 weeks, 10 business days before that loan was actually underwritten and approved. You talk about a waste of time. I mean, it did not help me compete at all. It did not help our client compete. So the speed and the accuracy, we put $1,000 guarantee on this letter. If we send it to you and then we can't close because of credit, income, or assets, then we're going to pay the buyer $1,000. Doesn't happen because we do such a good job. Our underwriting team does such a good job making sure that everything is, all T's are crossed and I's are dotted, that we have a lot of confidence in it. And Rocket is definitely not in the habit of putting guarantees and putting money where the mouth is if we don't feel like we can perform. Okay, so, oh, I'm sorry. Let me just close that. My apologies. Let me get back here. So, call to action. So, summarizing what I think would be, some good advice for you guys, some takeaways. If you're a listing agent, when you are walking through the property, you're doing your listing presentation, if the water heater is really old or the refrigerator is really old, encourage your seller to install energy efficient appliances and smart home devices. Something as simple as a smart thermostat. When we moved into our house, we had just one of those old ones that you're just like dialing and everything. And I spent I think $80 on what was it, Amazon Prime Day, getting a smart thermostat. $80 took about 5 minutes to put in, and I can control it from anywhere I'm at. If I'm going to go home and it's cold, I'm going to turn the heat up before I get there. Um, those generations love that kind of stuff. Heck, I mean, I'm Gen X and I love it. But suggest that the amount of money that it would take to do those things, to open up a pool of buyers and to get a higher price is it's very minimal compared to not doing it. Market online with high quality virtual tours. I know a lot of you already do this. Some of the tours I've seen online, they're real claggy, they don't work all that great, and it's frustrating. Just make sure when you're doing it, think like a millennial, think like a Gen Zer. You want it to be easy, you want it to be accurate, you want it to look good. temporary buy downs, what I mentioned a few moments ago. Let's offer that in the listing. Why not? Don't worry that it's a, oh no, that, we're trying to get the most money for the seller. Well, yeah, you are, but this is actually going to help you do that. Because why? You're opening up the pool of buyers to not just this many, but this many. It also speaks to the younger generations that the seller understands that, especially in the world we're in right now, there's an affordability concerns. And how do we mitigate that? And how do you get a higher price? Go ahead and offer a temporary buy down. I'm happy to talk with your seller, explain how it works, what's the benefit to them and to the buyer, and how much does it actually cost. I can go ahead and run those numbers now. It doesn't have to be just something that we guess. Um, Selling agents, when you are interviewing a potential buyer to represent, keep in mind they have environmental concerns. They desire for a smart home. Talk with them about that. What is it that you're looking for? You might find some that say, well, I want it to already be all done. When I move in, I don't want to have to do a thing. And you might find some that want to be a part of that process. Ask what type of research they've done. They've already done some. How have they got to you? If not by referral, some type of research. Try to understand really what they're looking for. What are their goals? Encourage them to go through the verified approval letter process. This is important. It can reduce stress and anxiety. You know, I've been doing this. March is going to be 18 years, and I experience stress just on a daily basis for my own clients. Um, but we don't want them to experience it in a transaction that really does not have to be terrible, right? It can be a pleasant experience, believe it or not. It's like going to the dentist. Are you going to go to the dentist and get a shot of Novocaine in your mouth, or are you going to have the dentist drill just directly in? Let's make it as easy as possible. Let's get the verified approval letter done. It's going to be, we're going to have better retention. We're going to know that that loan is most likely going to close as long as that property is clear. Mental health is also very important to the younger generations. They talk about it openly. What better way to help address that by alleviating stress and anxiety by putting them through underwriting up front? Let's talk about multifamily units. Again, FHA is 3.5% down up to 4 units, and conventional is 5% down up to 4 units. And most don't require reserves. Emphasize the freedom that home ownership brings. You can do what you want. If you want to improve your equity, then you can improve the property. You can renovate, like say the garage, like I did. You can, update the appliances, things like that. That's going to give you an equity return. You can have a steady budget now. You're not renting where the landlord can increase the rent the next year by a couple $100, and now all of a sudden you can't afford it. Now you're scrambling to move. You're uprooting your home, your family. What if you can't find a property in the same school district you're in, and now you've got to move out to a different school district? That can be very stressful. Let's help them understand the stability that homeownership brings. Steady budget, tax advantage, and civic pride. Again, these generations are, and a lot of them first home time generation homeownership in their family. It's very important to them. And I know that I want to be a part of that. I've talked with you guys many times about bridging the gap of generational wealth. And this is the best, if not the best place to do it in the form of home ownership. Okay, well, I'm actually 9 minutes early. I usually go over, so I'll go ahead and stop now, and we can look at what's in the chat. Mike, if you'd like to, talk about anything or touch on anything that I've mentioned, feel free.
No, sounds good. I pointed out that I made a video on house hacking on my YouTube.
Oh, good. Well, there you go. Nice.
Which is borrowing content from others to make videos to post on social media.
Well,
why
just
not?
all research.
Yeah. So any questions out there? Now's your chance.
Thank you, Jody. You sound so excited, and I can't wait to meet with you.
Sounds good. I think we're meeting here in just about an hour or so, right?
Yeah.
Awesome. Yeah, I am excited. I think you guys can probably hear it in my voice since I joined Rocket. There's just so many great things that they're doing, and I know it's a large company, but there's something to be said for that, especially given the resources that they have set aside in the technology sector when it comes to home buying and all the tools that they're providing us as loan officers to be able to compete, but also more importantly than competing is to be able to provide a service that helps people live a dream that they never really thought they could. Okay, let's see. I think we have a question here.
Not a lot of questions.
Oh, okay. Some tools provided.
My Zoom.
This is Hemant. I have a very general question actually, and this is regarding the current market we are in, right? I mean, the inventory is low, prices are high, interest rates are high conventionally, right? In this situation, how do we convince, a home buyer?
Well, I think so. Let's say, okay, so you said interest rates are high. You said
Inventory is low.
inventory's low, and home prices are high.
Correct.
Right. So how do we convince them? Well, we want to understand their goals first and make sure that it is the right thing for them. But one thing that I've mentioned these past couple months even is to understand that this is the new normal. We're not going to see interest rates at 2.5% or 3% on 30-year fixed anymore. It's not going to happen unless we have another pandemic or something horrible happens in the world, and we don't want that. We want to see sustainable home ownership. We want to see, a nice, what is it, a 3 to 6 month housing supply. Until we get there, this is our new normal. Rates are going to be what they are probably the rest of this year. I do not think that we're going to, go into the low fives this year. As you can see, even since beginning of January, we've gone from 6.25% to upwards of 7%. The market has shifted exponentially. So what's the focus? Yes, prices are what they're going to be. Rates are going to be what they're going to be. Go ahead and do it now versus waiting, because you're going to pay it one way or the other. You're going to pay either in a higher purchase price, lower rate, or higher rate purchase. It is what it is. I think focusing too far on the past is probably the downside. So when they say rates are high, well, what is high? What's high to you? You didn't buy when rates were 4%, right? Well, that's not the reason. What's the real reason? Try to dig a little bit deeper. I think a joint call together would be great to help them understand, what all this actually means and what are the benefits to it.
Yeah, I mean, there is a general expectation that, the Fed is going to, reduce the rates, this year, later this year. So, people may be expecting that, okay, why do I pay 7% now? It's going to come down.
Well,
Let me
probably not. Oh, go ahead, Mike.
So if you're in my group, you ought to participate in the workplace group that I have, because I post stuff about this.
Okay.
Most of the prognosticators have revised their estimates for what prices are going to be like at the end of the year, and they're going up, not down. So even waiting means that property is still appreciating, it's still going up. And if it's going up even 5% in a year, and some of the estimates are as much as 7%, and of course it varies on where you are, and it's a $800,000 property, then that means it's going up $40,000 a year. And if you divide that by 12, you're going to find it's going up over $3,000 a month. So waiting doesn't mean you're going to get a lower price. It means the price is going to be higher. Secondly, a lot of the investors tend to buy when interest rates are high, because all the amateurs are waiting, and they all know that they'll have a better bargaining position when everyone else is sitting on the fence, and then they can refinance later when interest rates go down. And if you wait for interest rates to go down and then more inventory so that the herd of buyers all move at once, which is what generally happens, then now you're talking about 10 offers, 20 offers. I was making offers. I had some really strong buyers in 2021. We made over 20 offers. And this is somebody with 50% down, perfect credit. And one time we bid $500,000 over the list price and didn't get it. And the listing agent said, "You weren't close, sorry." So yeah, you can wait like everyone else is waiting, and buy when everyone else is buying. But now you may pay 100,000 over list price, have to give up all your contingencies in order to compete. So what I recommend is that they look, and if they find the house they like, buy it. If interest rates do go down, refinance. If they don't go down, they might even go up. There are videos of me doing home buying seminars using 8 and 10% as the interest rate. I'm not kidding, right? I mean, we weren't like, oh my God, it's 8%. It was 8%. You know, that's just what the interest rate was. So it's all kind of relative.
Okay, thanks, Mike.
Show them a nice house. Any other questions? Sorry about that, Jody, but I can't
No,
stop.
go ahead, of course.
It's my, you know. Go get it. Any other questions out there? Not after that. All right. All right, well, unless you have something else, I put your contact information in the chat a few times. Those of you that are on my team, there's a list of business partners, and Jody is on that list. So if you have any other questions, want to do some co-marketing, want her to talk to potential buyers, you don't have any excuse not to.
Call me anytime. You guys know I'm always available 24/7. Evenings, weekends, encouraged.
2 in the morning, go
Yep.
ahead. All right.
Thank
Are we-
you.
All right, thanks, everyone.
Thank you.
Thursday, we're doing another session, right? A team meeting. Be there or be square. Jody could join us if she wanted to also
Sounds good.
talk about the
Awesome.
market.
We'll be
All right.
there. Bye.
Bye-bye.
Okay, thanks, everyone.